You've seen the ads, right? The ones for Forex trading, showing off the quick riches and the laptop lifestyle. But what does it really take to trade currencies like a professional? Well, today we're going to cut through all that hype and build the actual playbook for not just surviving, but thriving in the world's biggest financial market.
Look, we have to start with this, just to get it out of the way. The popular image of Forex is this slick game where people make fortunes in minutes. But the reality? The harsh truth for most beginners is a very, very fast path to an empty account.
95%. Just let that number sink in for a second. That means for every 20 people who give this a shot, 19 of them are going to fail. Now, this isn't meant to scare you off, not at all. It's meant to focus you. This one stat is the line in the sand between the hopeful amateur and the serious professional. And our goal today is to give you the playbook for that other 5%.
This right here, this changes the entire game. Trading isn't about buying a lottery ticket. Your first job isn't to hit some massive jackpot. Nope. It's just to protect your money and stay in the game long enough to actually learn how to win. Survival? That's the foundation of everything in this business.
And that brings us to the core mindset shift. It's so simple, but so powerful. See, a gambler hopes for the best. A business owner plans for the worst. A gambler is all about luck. A business owner is all about managing risk. This whole explainer, think of it as your business plan, and it's built on 3 fundamental pillars.
So let's start with pillar 1. You have to learn the business. I mean, it's non-negotiable. You wouldn't open a restaurant if you didn't know how to cook, right? Same thing here. You can't trade in a market if you don't even understand its language or how it works. So it's time to go to school.
First up, let's learn the language. A pip. It's the basic unit of measurement in Forex. For most currency pairs, it's the 4th number after the decimal point. So if a price moves from, say, 1.0700 to 1.0701, that little 1 pip move is how you're going to calculate all your profits and losses. Next up is leverage. Now, this is the thing that gets everybody so excited about Forex. But honestly, it's also what destroys most new traders. It lets you control a huge position with just a small amount of your own money. So for example, 100-to-1 leverage means for every $1 you put up, you can control 100. Yeah, it magnifies your wins, but, and this is the important part, it magnifies your losses just as much. It's a tool that you have to respect. And then there's the spread. Just think of this as the cost of doing business. It's a small fee your broker charges by giving you a slightly higher price to buy and a slightly lower price to sell. What that means is every single time you enter a trade, you start just a little bit in the red. It's a fundamental operating cost of your trading business. You've got to know it. So what is it that makes these currencies go up and down? It's not just random noise, I promise you. It's driven by these massive, real-world economic forces. The single biggest driver? Interest rates set by central banks. After that, you've got big economic reports coming out, and of course, any major geopolitical events. These are the engines that move the market. Okay, so how do you navigate all this? You learn to read the charts. But listen, here's the key advice. Avoid that temptation to just clutter up your screen with a dozen different complex indicators. It's a trap. Instead, pick one simple, proven strategy based on how the price itself is moving and just commit to mastering that one thing. Your goal here is consistency, not complexity. And here's what a realistic timeline actually looks like. Spend your first month just learning the ropes. Then spend the next 3, maybe even 6 months practicing on a demo account where there's 0 financial risk. But here's the crucial part. You have to treat it like it's real money. Because if you can't make a profit with fake money, you have absolutely no business trading with your own hard-earned cash. This brings us to pillar 2, mastering your risk. You can't control what the market's going to do next. Nobody can. But you absolutely can and you must control how much you stand to lose. This, right here, is what separates the pros from that 95% who fail. And here it is. This is the single most important rule in trading, period. By risking only a tiny, tiny fraction of your capital on any one idea, you pretty much guarantee your own survival. Even a catastrophic losing streak, we're talking 10 or 15 trades in a row, it won't knock you out of the game. It just mathematically ensures you get to live to trade another day. And here's what that rule looks like in real life. If you have a $1,000 account, your maximum acceptable loss on any single trade is $10. 10 grand in the account, your max risk is $100. This isn't just a suggestion, you guys. For a professional, this is an unbreakable law. So how do you actually enforce that 1% rule? With a stop-loss order. This is your predefined exit point if a trade goes against you.
And crucially, you have to place it at the logical point where your original idea is just proven wrong, not at some random dollar amount you're comfortable losing. Think of it like an escape hatch that you build before you even step inside the building.
Now, this is where it gets really powerful. See, professionals don't just manage their losses, they make sure their potential wins are way bigger. This is called the risk-to-reward ratio. You should only be taking trades where your potential profit is at least double your potential risk. You're risking $1 to make 2 or 3 or even more.
And this is the magic number that a good risk-to-reward ratio unlocks. If you are consistently risking $1 to make 2, you only need to be right about a third of the time to be profitable. Let that sink in for a minute. You can be wrong on 2 out of every 3 trades and still make money. That is the core mathematics of professional trading.
Okay, we've covered education and risk management, but this final pillar, this one's the hardest. The market is basically a battlefield for your emotions. Fear, greed, hope, ego, they're your greatest enemies. Mastering your own psychology is the final boss of trading.
Your main weapon in this battle is a written trading plan. It's your constitution. You write the rules when you're calm and logical, so you have something to follow when the market is making you emotional. It defines exactly what you'll trade, when you'll trade, why you'll get in, and where you'll get out. If you don't have a plan, you're just gambling. It's that simple.
And here's the ultimate test. How do you react after a loss? Well, the amateur, driven by their ego, jumps right back into the market, usually with a bigger size trying to win it back. This is called revenge trading and is the #1 account killer, hands down. The professional, they accept the loss as a cost of doing business, close the laptop, and stick to the plan for the next opportunity.
So how do you actually get better at this stuff? You keep a detailed journal. You log every trade, not just the numbers, but your reasoning and most importantly, how you were feeling. Were you scared? Were you greedy? Overconfident? Your journal isn't a diary, it's a data-driven tool that helps you find and fix the psychological patterns that are costing you money. And that brings it all together. This is the complete playbook. It's not some secret indicator or a magic formula. It's a blueprint for building a professional trading business, piece by piece, that moves you from that losing majority into the disciplined minority. At the end of the day, the path to success is built on these 3 pillars. #1, a deep education in the business. #2, unbreakable rules for managing your risk. And #3, the psychological discipline to execute your plan flawlessly, day in and day out.
So, we've laid out the entire professional playbook for you. These are the exact same principles that successful traders use everywhere. The information isn't the barrier to entry anymore. The only question left is a personal one. You have the playbook. The real question is, do you have the discipline to follow it?